Our next guest sees lots of tailwinds for PE going into 2026. Joining us here at Post 9 with her private markets outlook is Anastasia Amoroso, Managing Director and Chief Investment Strategist for Private Wealth and Retirement at Partners Group. Welcome back. It's good to have you.
Sarah. Good morning.
So why do you think the tide turns for 26?
I think the tide has already turned. Clearly, it's not being reflected in the stock prices. But if you look at private markets activity across the board, has picked up significantly. First of all, if you look at transaction volumes, we're estimating they're going to be up industry-wide about 35% year over year. So that gets us in the U.S. almost back to the levels we saw in 2021. In Europe, it looks like we're actually going to surpass those levels of 2021. So that's the first thing. And then the other side of it, Sarah, everybody has been waiting for the pickup in exit activity. And when I look at M&A volumes, they're up globally about 40% year over year. And the IPO market in the U.S. especially is rebounded by about 70%. So all of a sudden you have a better deployment environment, you have a better exit environment. And so that's really quite supportive. You know, at the same time, you look at valuations of private equity firms or private equity-backed companies, I should say. Those EV to EBITDA multiples are not what they are in public markets. If in public markets, they're somewhere around 17 or 18 times. In private markets, they're closer to 12. So I think this combination of entry point with the activity tide turning, that's quite supportive.
But they're not even private equity companies. I mean, they are, but that's part of the business. But they, private credit has grown so large.
Right.
And there's been some concerns around that. Some of them have like insurance companies inside of them as well. So.
Yeah, look, there are a lot of private markets platforms that have been created. And, for us at Partners Group, we have exposure to private equity, private credit, also infrastructure, real estate, and royalties. But I want to address the private credit, part of it because we get a lot of client questions around it. And look, a lot of the issues and a lot of the headlines that stem from private credit, first of all, I think are idiosyncratic. Sometimes they're not even related to private credit. They're related to the broadly syndicated leveraged loan market. But if you think about, Sarah, what happened to the growth of private credit market, it was about a $600 billion AUM space. It is about $1.7 trillion today. So just by virtue of sheer growth in the market, you are going to get more headlines. You are going to get a lot of those idiosyncratic reports. So that's the first thing I would say. But if I look at the default rate within private credit, for example, especially if you are a PE-backed company, that default rate is still lingering around 1%. So it's not actually risen, much at all. If you're a non-PE-backed company, that default rate has been going up.